The markets are walking a razor edge, and the clock is ticking. Welcome to Daily Market Waves by Investing Angles, where every candle speaks, every Elliott wave whispers, and we chart the turn before the herd even blinks. Tonight's map: volatility, a few quiet moves, but the monthly closure tomorrow could set fireworks. Dollar, a setup we haven't seen since 2002. Are you ready? Bonds, Canadians, brace yourselves. The US bond market teeters undecided, but TLT is hinting bearish. Tomorrow is D-Day. Oil, another textbook move. Proof again, candles do predict the future. Natural gas, stick safe or a breakdown? A critical moment ahead. Uranium, a bullish setup that could ignite May. Gold, the technical echoes of 1980s are getting louder. S&P 500, a multi-angle assessment sector by sector ahead of the pivotal monthly closure. Nasdaq still tracking cleanly with our Elliott wave roadmap. Special, Seng Index, a must-watch monthly closure and what it could mean globally. A massive thank you to our 20,000 plus subscribers. Your support powers this mission. And if you are new, don't wait, subscribe, like, and share this video with your trading and investing communities. Drop your favorite ticker or sector in the comments. We love hearing from you. A reminder, early subscription access is now open. Full launch of Investing Angles premium services is May 1st. Secure your spot and stay ahead of the moves. Let's dive straight into the charts. And as usual, we start with Volatility Index. So what we are seeing today is very interesting. Just a few notes. Technically, the candle on the index is bullish. Is bearish, pardon. Is bearish, and this telling us that we might see lower lows tomorrow. However, if we look at the futures wasn't able to negate this green candle entirely, and right now it is sitting somewhat neutral on the daily frame. And another thing I'd like to share with you. So this is the XY ProShares Trust short-term futures ETF. I'm usually tracking it for reference. And it's very interesting formation happened today. So first of all, the candle wasn't fully negating the green candle, and this quiet move here. So this is the 100-day by 200 days moving average bullish cross. So last time it happened a while ago, and especially with these technical conditions. And one would ask, why? What does it mean to say, and what will happen next? Let's see what indeed happens tomorrow and how the monthly closes. Let's have a look at the bigger frame. So this is a disconnect again between index and the futures. 3-day candle closure today. Technically, the index formed a tower top and is ready to move lower. However, from the candle's perspective, the futures were not so brave, so they are still bullish at this moment. And in order to make this move, they need to close below the green candle low in the next 3 days, which would be on Friday. So let's see what happens then. And the final, the few more. This is Elliott wave, something we discussed way for almost entire April. So far, we are seeing that the wave down is almost horizontal right now, and there is a potential for forming a bottom. However, it might get lower until we see a clear reversal point. And now the final, I'd like to talk about this particular one. This is the 2 months closure tomorrow. The candle so far is bullish. Unless it pushes down below 22.80, it will close with a bullish formation, potentially forming a very big top or even a double top. And the most interesting thing that the last time this was a similar condition happened in year 2020 right here, and another one happened here in 2007. So this was a very similar technical conditions for both of these moves. Let's see which one will be picked this time. So that's the perspective for volatility. Now let's have a look at the dollar index. It has a few interesting moves today too. So first of all, I would like to say, so it's still not closed yet. It's still have 27 minutes to go. But what we are seeing here is that the daily is forming a very clean bullish Harami. And together with the 4 previous candle, it could be a very nice bullish flag. But this is not the only concern. This is the biggest concern. MACD cross, which is right now almost happened. So it will be recorded most likely either today before the closure or tomorrow. Today it would be more dangerous, I would say. But this is, if we look at this particular cross and its magnitude. So last time we've seen something like this. It was in the year 2002 and in the year 2000. So these were the record ones in this century. And now we are seeing another one of that magnitude happening as we speak. Well, that definitely will be a bounce here, a very significant one. The question is how big and how high. That's the two pressing questions that I still have no answer. We will see what kind of wave and how it will be administered. So far, this is a big concern. If we look at the monthly candles, they are closing with a bearish formation, and there is a chance that we are seeing a move down. However, I would like to say that considering the MACD bullish cross, it's a very big chance that dollar index is forming a bottom and is ready to launch a strong rally. However, if this rally begins tomorrow and it makes about 2.6, 2.7% approximately, then this formation would be reversed and it would change into at least a neutral one. Now let's have a look at the chart. No changes here. We still consider this as a big bearish, as a big bullish flag, multi-year, and the ideal target for this move for the current wave would be between 98.30 and 96.0. So that's the target remains, and from the long-term perspective, we are looking for potential bullish flag, again the multi-year bullish flag, which will drive the price upward much higher towards 113, 120. That's the perspective. They are not changing, and we will see how dollar closes tomorrow. Now let's move on to the bond market, and we will start with a big warning for Canadians. Canadians, be prepared. This is a bearish and a bullish engulfing on the monthly frame. And if it closes like this tomorrow, I wouldn't be surprised if the rates will skyrocket here. Let's see how it closes. If we look at the US, 10-year yield, it's not that decided yet compared to the Canadian one. So that the daily is still moving down, and the freshly made 8x20 EMA bearish cross, there is a chance for continued move down. If we look at the weekly, there is a potential setup for rising 3 methods. If we have another week like this, after the green candle, we might see another green candle upward here. And the monthly, which is closing tomorrow, so far it is a neutral doji, but in the context of the previous one, it could be a bullish closure. Let's see how it closes. Now let's have a look at the shorter term frame. This is the 20-year yield, an inverse counterpart for TLT. I'm looking for potential an ABC wave 2 ending with an ending diagonal. If it makes a very sharp and decisive move upward, flipping the short-term frames, we would be considering a rally like this. Let's move to the next one. This is our long-term chart, very long-term chart, all-time chart. We are tracking it since December 2022 for almost 2.5 years. The charts have been unchanged, and in one of our musings in the weekly discussions that we post on our website investingangles.com, I suggested an idea that this wave 2 could extend a little more, a little lower for maybe a few years, depending on certain technical moves. However, let's see what happens right now. We remember that the closure of the quarter was technically, last quarter was technically bullish. Let's see how it administers this time. Now let's move on to the TLT. That's an interesting thing here happening. And first of all, the daily is bullish. And I would say there is a chance for seeing higher prices. However, the 5-day closure today, it was an epic failure, I would say, because instead of closing at least 1 basis point above 90.20 in order to confirm this bottom on these 3 candles, TLT closed just on this level. This is the high of this red candle, 90.20, and we have a closure of 90.20 of 5 days. So technically it's a big bullish failure, and now the odds are with bears on the bigger frame, 5-day, and the monthly so far is looking for a bearish closure. And I'd like to say that we have this particular monthly 50 over 200 months bearish death cross, which happened in October 2024. We discussed it obviously earlier. And the final is for this one is the TLT short-term perspective, something that we discussed with our members for a while. There is a very nice wave ABC here. If it ends and reverses here, I would be considering it as a wave, a potential beginning of wave 3. However, before yesterday, I discussed a potential bigger flat here, and if TLT forms an impulse like this, if it moves above this target area and forms wave 3 towards this level approximately, well, we would be considering another impulse here for wave C. And I'd like to say that wave A or C in purple that started in January 2025 has been corrective. So, and we haven't seen a lower low since then. So this next wave could be a bigger flat. That's all about for the bond market. And now let's move on to commodity. Today we have quite a few items to discuss. And we start obviously with oil. So oil is falling, and it's falling hard, and we are not seeing any bottom for it yet. So after a strong bearish engulfing yesterday, today it formed a continuation candle, another bearish one. On the 5-day frame, it formed another strong bearish engulfing, reinforcing the bearish odds on the midterm frames. And the 4 months here, it's closing with a very strong bearish candle. It reminds me something about this one in September 2014, or a similar one in January 2020. Well, technically these could be a repeat of these moves, and I'd like to say that we are looking for fresh MACD bearish cross, which is going to happen tomorrow. I doubt oil has any power to revert it, because it would need to rally about over 10%. So now let's have a look at the short-term Elliott wave. No surprises here. Some as we outlined in April 18th, looking for a diagonal to complete this wave in the target area, and now we are looking for an impulse down. Potentially this is wave 1, 2, and looking at the strength of this wave, most likely it's going to be wave 3 of a bigger impulse down. So whether it's going to be wave C or wave 3 of a larger degree, this is yet to be seen. So far we can start looking into potential channel for this particular wave. So this would be wave 3, and the 58.41 is the an immediate target for the completion of the ending diagonal. This is we discussed before. Now let's move on to the next chart, and this is I'd like to show something who are watching to those who are watching us for the first time and are still skeptical about predictive power of candles and Elliott wave. So this is the very good example. The candles. This is the chart made in August 21st, 2022, almost 3 years ago. And I said that there were 3 black crows on the monthly frame for oil, and this is not going to end well. The previous 2 strong moves, they were leading to losses of 67 and 50% approximately. And now I was saying that we need to see about 50% drop or bigger. So this is exactly the same chart, no changes here. What we can see that since the call, oil lost 32%, and at the bottom of this candle it was 38, and would be 36. It would be an average move if we consider 50 and 67 as the 2 data points. Well, so far you see that 3 black crowns are pretty powerful on the monthly formation, on the monthly frame, and we are looking for lower lows for oil. Now let's have a look at this chart. This is statistical call that we made on March 25th, saying that if oil makes a 4 months bearish MACD cross, it will end up somewhere between $50 and $30 per barrel. So far it is on track. Let's see how it moves further. That I would say that MACD on 4 months is a done deal. If we look at Brent, this is another data point I'm using. From the candles perspective, this is a hopefully bearish closure we are looking for tomorrow on the 4 months frame. In order to reverse it, Brent oil needs to rally about 22%, which is obviously impossible, and we have to admit that the odds will be bearish for the next couple of months or maybe couple of quarters. And just to wrap up the oil part, I'd like to show these ExxonMobil, Chevron, and ConocoPhillips chart. This is the monthly closure that is going to happen tomorrow. Well, Exxon still has some chances to mitigate the bearish candle. A rally of 6% wouldn't be something highly unusual. But for Chevron and Conoco, I would say this is already written. They are going to close with monthly bearish candles, and I'm afraid Conoco is going to form a 3 black crowns on the 4 months frame. Well, just to keep this in mind, oil companies are going to be very bearish after the April closure. Now let's move on to natural gas. All right, so far after the call, it is moving upward and continues to add value. After a very strong bullish Harami on Friday, a strong confirmation and multiple frames flipped bullish. If we look at the 3-day frame which closed today, it's a very strong tower tower bottom, potentially leading to much higher prices. The weekly closure is expected to be bullish. However, we still have 3 days to think about it. And I am surprised with this huge stick save that happens on the monthly frame. So far, the price pulled up above the 200 days moving average. And if we see another push upward tomorrow, this bearish candle will most likely transform into something either less bearish or even bullish. And one more thing for natural gas, we are looking for a monthly 2 months MACD bullish cross to happen tomorrow. So far it is marginal, but a little move higher, it will solidify and record it tomorrow. Now let's have a look at the Elliott waves. I'm still looking for 3 potential paths here. One is the green one, potentially the bigger diagonal for and leading diagonal, expanding leading diagonal for wave 1. And another potential path is the red one. So the leading diagonal is already complete, and we had wave 2, ABC down, and now we are looking for wave 3. So the blue path is still on the chart. However, I would say it's very low probability at the moment, especially if it closes with the signals that I just discussed on the previous chart. Speaking about this more view, I'm looking for this particular zigzag type wave, and the final one was likely a diagonal. If this is the case, then we should see a very sharp and strong move toward this level, 4.36 in a couple of days, maybe in a couple of weeks. Well, and after that, I'm still looking for a bigger move, and I already discussed it with our subscribers in yesterday's daily report on natural gas. Now let's move on to the next commodity. This is uranium, and we are talking about energy fuels. So the most important thing that is likely to happen tomorrow is going to be a bullish engulfing on the monthly frame. And if it happens, particularly if it pushes and closes above the 50 months, this is 100 months moving average, the purple line, I would be considering it a very strong reversal move. And even if we can see some pullback lower on the daily and 2 daily frames, the weekly so far is neutral. It didn't change a lot, so we might see a little pullback at the beginning of the month, but later in the month I would be expecting a move upward. And this is the chart that we've been discussing for a while. The red path, either immediate move higher or still one more lower low for more extended wave B, which could be a zigzag or flat, and after that wave 3 starts. So technically it aligns with the perspective of the monthly candle closure. Now let's talk about gold. What we are seeing here is an epic move. So this is MACD bearish cross of a record magnitude. Last time this MACD cross happened in 1980. I mean, of this magnitude. And this time it is even higher. So, and just a few days ago in our video, I discussed the potential impact of having the MACD cross of that magnitude. So if you're interested, you can watch our weekly digest that we posted on Sunday, and I think that we have also a lot of detail in the gold weekly report. outlining the perspective path for on the all-time chart. Well, so far only the daily, speaking from the candles perspective, only the daily frame confirmed a reversal. The other are still pending, and the weekly is still pending a decision. If we look at the Elliott waves, most likely we have an impulsive wave down, which is either wave 1 or A, and now gold is forming most likely a bearish flag. So once it's complete here, we would be looking for wave C or wave 3 downward. So how it completes, it's not clear. It could be a diagonal, or there is also a possibility that wave 2 already done here, because this one wave could also be viewed as an impulsive one. So this is the cross that I discussed, just a presentation, like graphical presentation. And if we need to scroll way back to 1980 in order to see a cross of a similar size. So this is 1980, and this is the cross, the second largest one. And what you can see happened after that cross. Well, let's hope that this time it will be different and nothing like this will happen. Let's see, let's monitor. And this is the final discussion, final chart for the gold. This is GOD. So far, GOD is struggling to advance, and it formed technically bearish Harami cross here and bearish Harami on the 5-day chart at the same time. Now the critical level to watch is this one and that one. So for the next 5 days, if gold closes above this level, it will resume the rally. If it closes below this level, most likely it will be a strong reversal. This is 5-day frame, and this is fairly significant one. Well, and I think that this arrow should be green. All right, so these are the levels. Now let's move on to, let's wrap with the commodities market, and let's move on to S&P 500 and the stock market. So let's have a look at the daily closure today. First of all, this is, I would say that the closure today was bullish, and we would be looking for higher prices tomorrow for all indices, S&P 500, Nasdaq, Dow Jones, and Russell. So nothing super critical here, and the freshly made 8x20 EMA bullish crosses for Russell, for all except Dow Jones, are quite telling. Let's see if bulls were able to move higher from here. The concerns start with the 3-day closure. So if the daily and 2 days are bullish, the 3-day had an epic failure today, and this is the futures chart, so it's more telling, has more information. That's why I'm showing it. So in order to form a bullish reversal, Dow Jones needed to close about this level today, and you can see it had a chance. It was trading higher. However, it was pushed down in the closing several minutes, and I think the same happened for Russell. So Russell also failed on the 3-day frame. Saying about S&P 500 and Nasdaq, they succeeded, and now we have a big disconnect among the indices. So we have a bullish closure for Nasdaq and for S&P 500. However, we have a bearish closure for Dow Jones and Russell. So let's see, it's a kind of tug of war, and tomorrow it will be a decision day, I think. Speaking about the monthly closure, which is coming tomorrow, so I would say that it is practically impossible for S&P 500, for Dow Jones, and for Russell to close with bullish candles tomorrow. Nasdaq is still doable because it needs about 3% rally, which is also, well, it's rare, but it's possible. The other ones are just impossible. Well, from that perspective, from the candles perspective, the closure will be bearish or at best neutral. And if we look at the next frame, next chart, this is the freshly made MACD crosses. There is no way S&P 500, Russell, Dow Jones, and Nasdaq going to reverse them tomorrow. So there is simply not possible. And what it means for these crosses, for freshly made, I'd like to show you this chart. This is the Microsoft chart that we made in October when the cross was only looming, and I think it completed at the end of October. So what happened after? We are seeing several months of slow bearish moves, and if we look at the candles, they're very close, resembling the pattern that we were seeing in 2022 for over a year. And the cross has been expanding here, and so far we are not seeing it reversing. And we made a statistical call at the time saying that Microsoft is expected to travel towards 285 at the time based on this one. And I think that what we are seeing is the early stages for reversal, for a much bigger bear market for the indices. And I think this is the most important part of today's presentation that you should pay attention to. These MACD crosses are significant, and no way they're going to reverse in the next couple of weeks or even couple of months. I think they're going to stay here, they are sticky, and they will be expanding down. It doesn't mean that they will be the indices will be falling like in year 2020, but I think it's going to be a slow, painful grind down. Now let's have a look at the Elliott waves. This is the chart that we've been talking for a while, and I think that we finalized it on April 22nd. So far, it's slowly climbing into the target area, and I think it still had a potential to move a little higher here, hit the target, and this would be an ideal one. If we look at the smaller frame, this is the same chart, just on the 30-minute one. This wave A has been clearly corrective. Wave A, wave B, also a correction here. And now wave C, it looks like it is shaping into an ending diagonal. And if it stays below 5666.13, it reaches a critical level for the diagonal and then reverses here, I would consider this as a complete one. And the most immediate drop would be towards 5100 and lower. And why this level is significant? Because wave 3 here is not the longest so far in the sequence. And if wave 5 surpasses this level, it will make wave 5 longer than wave 3. So it still could be a diagonal, but we would be looking for one more higher high. So far, the wave and technical support look for a diagonal completion of this move. Now let's have a look at the sectors. Sectors closed today practically bullish. Financial, technology, healthcare, consumers, discretionary, industrial, staples, and utilities. The only bearish closure was energy sector, phosphor energy sector, and I would say that there is a good chance that we might see another move higher, and maybe even at the beginning of the month. However, I'd like to say that, for example, XLK today formed a 100 over 200 days moving average bearish cross, and there are other technical signals that are not very healthy, and we will discuss the monthly closure tomorrow. Right now it's not there are still options, but most likely they're gonna be bearish. And now let's have a look at the monthly closure of the big stocks or large caps. So far, if we look at Microsoft, it looks bullish, right, on the daily frame. However, if you flip into the monthly closure, it still might be bullish because it's right now is a piercing line, and we might see a move higher. However, if we look at the bigger frame, for example, 2 months closure, it's a bearish move. If we see it here, if it closes like this, and the 4 months frame, it's even stronger. This is a bearish engulfing. Last time we saw this type of candle in January 2022, after which Microsoft had 8 months of decline. So this is a very significant and a very similar move. Somewhat similar is happening for Amazon, for Apple. Tesla, surprisingly bullish, and it will depend on how it closes tomorrow. Berkshire Hathaway, an interesting closure here. It could be an advanced block, but in order to confirm it, we might need to wait for another month. Speaking about Google, it is closing the month with a bearish candle. NVDA, it's a neutral bullish, and Meta is closing with a bearish candle. And just to think, I wanted to show. So NVIDIA on the monthly frame. So if you remember the MACD cross that we just discussed, so this is NVIDIA, this is monthly, and this is the all-time chart. Look at this magnitude. It is technically 4.5 times higher than the previous MACD cross, which led to very significant losses for NVIDIA here, and it happened in 2022. Just so this was the loss, 67 2/3 NVIDIA lost in 2023. So if this happens right now, let's measure it. If this happens right now, 2/3 of it loss, we would be looking for the price of 49, below 50. But if we consider the magnitude, which could amplify the move, I wouldn't be surprised if NVIDIA moves much deeper below 50. Let's see how it closes and what kind of wave it makes. I think I'm going to make a special NVIDIA discussion later after the monthly closure. Well, that's the perspective for NVIDIA, and the other stocks like Apple, they're not far away. And we already discussed that Microsoft is under big impression of the monthly bearish cross, which happened way back in October. Well, now let's move on to Nasdaq, and let's have a look at the chart. So technically, it's a very similar formation that is happening with SP500, and Nasdaq potentially also forming an ending diagonal here. So this wave is not very healthy, and it's not an impulsive. If we look at the slightly bigger picture, this is what I've been tracking for Nasdaq since the beginning of April, technically. Once we are saying that the very first wave, A, B, C, potentially in purple, one way or the other, purple or red, completed here, we would be looking for wave like this, potentially a zigzag. So this could be either wave A of a bigger B or the entire wave B before the next move down. So that's the perspective for Nasdaq, and today is April 29th. And for a special feature today, I wanted to discuss the Hang Seng Index and its potential closure in 9 hours 22 minutes. So the monthly closure is looking for a very strong bearish reversal candle. We are seeing a spinning top here, which will be engulfed with this bearish hammer or hanging man, and I would be looking for a decline for at least 1 month, maybe more. If we look at the daily candles, so daily is a very suspicious build up of candles here, and if Hang Seng is expected to move higher, this is not what the formation would be. And speaking about the weekly, it's still unsure. We will see how it closes on Friday. And if you look at the larger frame, this is the chart that we shared with our subscribers way back in, I think we started this discussion way back in 2024 when we were looking for potential flag here. Now this wave evolved a little bit higher, and the interesting point here that this wave has been a diagonal, potentially an expanding diagonal for wave C. If this is the case, we would be looking for an immediate return towards 14.7K approximately level. However, as this is also a potential flag, that I would be looking for a much lower price. Ideally, I think this could be the red pass, wave A here, wave B, and this would be wave C. An ideal flag target would be somewhere between 83 and 40,000. Well, that's the outlook for Hang Seng, and the move down right now is in the cards. And this is this very short frame, so it's 2-hour frame. So what we should be looking for is an impulse down. So this is an impulsive wave. This is a correction. This is wave 3 potentially. This is potentially wave 4. And if Hang Seng makes a new lower low here, I would be looking for an impulse down. And this would be only the first wave of a much bigger correction. Whether it's going to be a bigger impulse or an ABC type of wave or an WXY, this is going to be just the first wave in this correction. So just keep this in mind, and technically this wraps up our discussion today, and I would like to just summarize it. So the markets are calm on the surface, but the undercurrents are anything but. Volatility is building pressure behind the scenes. The dollar prepares for a generational move. Bonds could tip the balance tomorrow. Canadians and US investors alike stay sharp. Oil reaffirmed once again, technicals matter. Natural gas, will it pull a miraculous save? Uranium set up for May remains strong. Gold's flashback to 1980 is not to be ignored. S&P 500 sectors and large caps hint at major shifts. Nasdaq continues its technical journey, but key levels loom. Big decisions are just ahead, and those who plan today will rule tomorrow. If you found today's session valuable, smash that like button, subscribe, and share it with your teams and trading circles. Every video now has a join button and a super thanks button if you'd like to support our work even further. Early subscription access is open. Full launch May 1st. Be among the first to secure the best rates and uninterrupted service. At Investing Angles, we don't chase. We chart the turn before the herd even blinks. Stay sharp, stay objective, and see you in the next wave.